Hey guys, this is Martin from Hedging, the channel for learning about trading and investing. Welcome to the daily stock market technical analysis show, where we analyze the charts and try to understand what happened in the market during the day and plan for a better trade for the upcoming day. That's January 9th, Tuesday, tomorrow, 2024. So we had a correction that has come in, big red day, but still at a support zone. Let's get into the wrap up. Before that, let's see the charts and see what do they say. We will look at the plain chart. What we see here is Nifty. The candlestick that you see here is engulfing bearish engulfing wide range bearish candle. Banknifty also wide range bearish candle, right? And it is the 20 exponential moving average could not hold that support is gone, but Nifty, the support is still there, quite some space is there. Both of them have, there is some M pattern also we can see, which is bearish in nature, double top, and it's at support zone, and this is a place where the previous resistance break was broken out and then market moved up. So this could be a zone where the support can be found, and change in polarity bounce up can happen from here. For Banknifty also, this is a zone which show a breakout, so that zone could act as a support, and then some consolidation, its change in polarity bounce can be possible here as well. But otherwise, we know that markets are at the very top of a trend line channel and a retracement of 2.5% on Banknifty and 1.5% on the Nifty. So it's not much of a correction. It's exactly the same amount of correction that happened earlier, still within that box, that range. Banknifty also still within that range. So market is still trending. The only difference is that today it lost the momentum on the Banknifty. The Banknifty is slightly more bearish. The momentum has slipped in the bear zones, and the trend indicator index also has crossed over the bear zones. So I'll just quickly check. So let's so we'll just analyze and see the resistances and support levels. Right, so the first resistance on the upside in the all-time high 21,834. After that 21,900 and 22K is the big resistance because of the big rounding number. Downside, the gap that you see at 21,477 is the crucial testing place. If it is breaching, then more downward can be expected. If it is breaching today's candle is low also, then it indicates some more corrections around the way, and it could find some support at 21,350, which is a 20 exponential moving average, and if that is breached, it could find support at 21,100, which is 23.6 retracement from the top. And after that, you have a 21,000 big rounding number and also a 61.8 Fibonacci extension. Fibonacci extension is used to project upside, but that is also the peak. It is above 78.6, and then you can't find the project upside. So it was a very top where a correction was required, and it has come in, and more may be due. But the supports downside would be the 20 expression move average, 2350, and then 21,100 and 21,000 rounding number for the coming days. Banknifty, similarly, the first resistance to be taken out is the all-time high at 48,650 nearby, and then 49,000 the big rounding number resistance on the upside. Downside, the 20 exponential moving average support at 47,500 is gone. That could act as the first resistance, and then we would have 48,000 rounding number, which it just lost also, the second resistance, and the all-time high of 48,630, which I said is the first correction earlier, excuse me on that. That will be the third major resistance that could come. Downside, 47,100 is a 23.6 Fibonacci retracement support, the immediate that can come in. So also in confluence with 61.8, so that 47,147,000 is going to be a very good support zone. That is also pretty close to 46,500, and then it has support at 46,350, which is a 50 extension moving average, and 46,000 rounding number is also a 38 Fibonacci retracement and a 50 Fibonacci extension zone. So the worst case scenario is 46,000, you can say. If correction further extends, the worst scenario in the coming days may not go on single day, right? But keep making out of those levels in the downside and upside. So we'll just wrap it up quickly. So we have a bearish day of nearly 1% and 1.5% nearby on Banknifty. 198 points gone on Nifty, but 20 exponential moving average still retained. 709 points gone on Banknifty, the dip cut, and 20 exponential moving average loss. But remember, we are in a rally of 26 to 30%. The recent previous swing low itself is 16% rally that has come in. So this correction is very reasonably less, I would say. Fyers were selling, and they are also selling heavily the other days. Today's data is not coming. Most likely both of them might have sold today as well. Otherwise market cannot dip this much. Now resistance and support level I already talked, I'm not repeating that. The momentum has slipped in the sideways in the Banknifty, but momentum is returned in the bull zones on the Nifty. So there is a divergence which is bearish in Asia on both the indices from the momentum perspective on the short term charts. Both of that met the targets. Now in the Nifty alone we have a positive divergence which is bullish in nature. If it takes us upward of the RSI 60, it can bounce in, right? The trend also has crossed over to the negative zones for Banknifty, but trend is intact, is bullish, although its trend strength is falling for the Nifty. India VIX has spiked up 6.6%. Yesterday it cooled off 6%, and today it has spiked up, and so it's 13.646. The VIX has been behaving quite indifferent since quite some time, because the market is in the very top, and the fear of heights was reflecting on the VIX, and so today there is a spike, which is okay, which is quite natural when the market is falling, which is also spiking, but otherwise it's just behaving in different manner all these days. But anyway, option sellers, the implied volatility for the VIX versus the realized volatility spread is somewhat in the mid range, which is positive for the option sellers. Now the Bollinger Bands has a contraction that has appeared now. Yesterday it was expansion on the Nifty, but the Banknifty already was in the contraction, and it was contraction of the bands would indicate that it's a sideways consolidation that may be expected in the coming days, right? So technically market is still bullish. In the medium term, if you look, the direction is very clear, but the correction is coming very less, right? And you don't know whether further correction is will come or not, because it's still at a very good support zone. A lot of gap supports down there, even if it corrects for that. So 5 to 10% of correction is quite normal after such vertical up moves that happen. Anyway, so today markets were all red except the reality sector, which managed to close green. And all the sectors still maintain, across the sector, still maintain the bullishness, except the IT and the metal that got hit and slept in the sideways. So across the industrial sectors that contribute maximum to the index, not much harm, although today it was deep red. And if you look at the heavyweights, that's where the trouble is. All of the heavyweights have closed red today, and all of them in the daily charts have slipped into the sideways momentum. None of them is bullish. That's trouble there. That's indication of what the sideways momentum, unless some leaders, heavyweights, have their rally. It's only the Reliance that is there, which is closing green today. Among the heavyweights, the Hedging stocks that contribute maximum to the index. US markets were showing some flattish close. Some red was there previous week, and some indecisiveness is there after having an equivalent rally like ours, and it's at the very top. So there is some jerkiness that you can see there. So you have to be cautious about that as well, because in some other market. Dollar has fallen flattish, but it's green. Rupee spiking up and remains there above 83 and remain weak. Crude is falling. Further, already it has fallen substantially from the 90 levels to the 70, and it continues to fall. It's not able to move further up. Gold also is falling after having made the all-time high, just slipped in sideways momentum and then trying to struggle to stay on the top or make another hit at the all-time high. So that's how the global commodities, global markets, and global Qs are about. Now these dips could be chance for value investing in SIP mode on quality stocks and all. Investing will be if there is a breakout that happens. Right? So from the trader point of view, the direction is very clear. It's bullishness in the medium term, but in the short term there is some, it's at a major support zone. At least the Banknifty point of view, just looking sideways, and there is some correction that is due, and then some correction is happening. But still, we don't know if this will the market do away with correction and then bounce up again or not. The clarity is not there. It will come in tomorrow. If the market reaches today's low, then it's going to be a correction that could extend to 5% or something from the current 1 to 2.5 kind of correction that has happened, which is nothing compared to the big rally that we had. So let's be cautious about that fact. We're winding up. Tomorrow we have the Nifty expiry. We look at these levels. So let's look at the Nifty charts first. It's at 21,300 nearby. Nifty also has got a deep red. Resistances is 21,600 zone. So that could be the place. So 21,600, 700 the place where some option sellers can make some money if there is any premium that's left over. Downside, it could get supported 21,230, and then if that is breached, it could find 21,000 would be the major support downside. But yeah, so that's 21,000 is going to be very cautious. The open interest is showing that the maximum resistance is at 21,500. So clearly we can bet on selling the calls at this zone. And downside 21,000, just like the charts are saying, is where the support is there. That's the levels on the next tomorrow's expiry. Now PCR is not bullish, it's bearish confirmed. Right? Let's wrap up. That's all I have. So if you're not subscribed, subscribe and share to friends and colleagues so that reaches out to max. Thanks for watching. And always, if the VIX is spiking up about to this 20, cut short position size, manage your risk. That's all that's in their hands. Rest is our probability study of the places where market will face resistance and market will find support. That's all. Okay. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.